Hey everyone, welcome to part three of the How to Pass a Prop Firm challenge. Now, we did have a week gap, which was my fault. I was out of town, so I had to film this when I got back. Now, I'm very excited about this one. It's probably not going to be too long, to be fair, but hopefully it's going to be very, very powerful. Well, I know it will be because it's really going to hopefully open your eyes to what you need to be thinking about in regards to your trading, the things that you need to be doing day in, day out, the repeatable process, essentially, which is the title of this part three series. So, very excited to get this out to you. It has been slightly delayed as well, but yeah, we're going to start off straight away. So, when we're talking about repeatable process, I do want to say firstly that we have had many Vipers get funded very recently. I think I just posted about it yesterday, I think it was, literally, and added an additional $300,000 to the Viper funded traders, if you will, and edging ever so closer to that 5 million total that we're looking to get by the end of the year. I think we're just over probably about 2.5, maybe 3 million by now, which is fantastic. And with these sort of videos like this, hopefully it's going to help so many of you who maybe aren't Vipers, who aren't members, think about and edge towards getting funded as well. Because at the end of the day, for us, it's all about helping fellow traders, helping people to grow and be better at trading, and hopefully then in turn have a much healthier and happier life as well. Now, when it comes to a repeatable process, you've got to think about what is repeatable in trading. What is repeatable? The repeatable aspects of trading is obviously you taking your trades, how you manage those trades, but also the things that people don't think about is when are you trading as part of your whole entire day. And before I do have a little illustration on the, say, risk to reward side of things, but before that, let's talk about the aspects that we need to be thinking about. First of all, I would say would definitely be your routine, your daily routine. This is one of the most powerful aspects that many of the Vipers who have shown progress and become consistent have implemented into their daily lives, which is a repeatable routine. Waking up at a particular time, trading a particular session or pair, and then having obviously the repeatable process when it comes to what they're looking for in the market, whether it's Fibonacci, whether it's key levels. Now with the Vipers, we aren't really using these sort of concepts. We're using more along the lines of, say, order blocks and liquidity. But whatever it is to you, because we use a particular strategy doesn't mean that you cannot use another strategy. As long as it works for you, and again, you have a plan, you have a repeatable process, and more importantly, an edge in the market, then it's okay. But we are very fond and very happy with the results that we can get using the strategy that we use. Now, that everyday routine differs depending where you live and are from. So, we have Vipers all over the world, from Australia to obviously Europe to America and South America. Now, the ones in Australia do struggle at times to try and trade, say, the London session, or definitely obviously New York, because of the time zone that they're in. Now, the same goes for those in America or South America, especially on the West Coast. I think it's the West Coast, but basically on the LA sides. Again, to trade London because it's in the middle of the night for them, 3, 4 a.m. And now for some it works. They're able to transition and be able to change their whole routine and wake up at those times. But for many, it's just not natural and it's very difficult. So because of that, we've adjusted and helped them to just trade and focus on New York. And then because of that, you then have to have sort of a filtering system of, okay, if I'm trading New York, which pairs are best to then trade during the New York session? And, it's definitely obviously your dollar pairs, GU, Euro USD, USD CAD, USD Swiss, and of course, gold being a major mover in New York as well. And these are the sort of things, as an example, you got to think about. Same with the London session. Your pound pairs are going to be fantastic for a London session trade and will more than likely give an opportunity every single day at that time. And that's just because the liquidity and the volume is stepping into those markets at those times. And these are the sort of things that, as a repeatable process side of things, routine. How does that look for your day? Can I trade the London session comfortably? Because even people in the UK can't trade the London session because of their jobs sometimes. And therefore, sometimes even the New York session becomes difficult for them. And then it becomes a bit of a challenge to work out what can you trade. And sometimes with one particular Viper, I had to give the example of trading gold because that moves quite frequently majority hours of the day and can give some form of opportunity. It might not be every day, but some form of opportunity, even post New York, just to make it viable for them to be able to trade still. Now, when you have that routine set, so think about, when can I wake up? And it's not even just about trading, the trading session. It's also about, when can you wake up? When can you do other things, other activities, so that, such as even spending time with your family, spending time with your friends. Maybe you have hobbies, maybe you go gym, maybe you play football, for example. Making a structure to your daily life, and then that will then form structure within your trading, because it's going to allow you to sort of thinking at different terms, and to really have a repeatable process. So each day what you're doing. Each day you're waking up at this time, you're doing this particular exercise, this particular time on the chart, or charting window, if you will. London Open might be 7 a.m. UK time to roughly 9:30, 10 a.m. UK time, meaning you have 3 hours a day to trade, giving you freedom. And that's a really positive point to note, that you're giving yourself freedom, right? You're allowing to, and the whole reason you got into trading was freedom, time freedom. And, a lot of people make the mistake of sitting on the charts all day, every day. And, that normally results in negative trading. And plus, it's the opposite of why you got into trading. So really have a deep think about that. But on top of that, you need to also have, obviously, a fixed risk to reward. Very, very powerful. Now, a system I built, which I share with the Vipers, is the 1 to 5 system. Now you could have a 1 to 5 a day, for example. It could be a 1 to 3 a day, and also obviously that will depend on your style of trading, what you're going for. But having a fixed system of a risk to reward, a fixed risk to reward, is very, very powerful. And I've probably not heard it anywhere else, to be honest with you, because a lot of people just have an open-ended risk to reward. Now, what having a fixed risk to reward allows you to do is to really see the edge of your trades in the market. So, for example, the 1 to 5, and I have a little diagram for this, so we'll just jump on that, shall we? I have a diagram for both the 1 to 3 and the 1 to 5. So here we can see, here with the 1 to 3, we can see quite clearly, taking a prop firm challenge as an example, you have what they say is 30 trading days, when really it's 25, because 30 days is going to be 20 trading days in total on average. And then you have let's say 50-50 strike rate, which should be quite achievable for most if you've got the right strategy. So meaning 10 wins, 10 losses on average. So we have to remember that averages don't work exact. Some months you may win 15 and lose 5, and on other months you might lose 15 and win 5. But that's why having an edge and following and trusting that edge is so important. Now, if you do that, if you're risking 1 to 3, if you're gaining 1 to 3 per trade, and you're risking 0.5%, your average return will be 10%, which is fantastic. That means you're just about, if that plays out perfectly, passing those challenges, right? However, in a perfect world, like trading, we know a perfect world doesn't really exist. So that's a bit on the edge there. And maybe for some of you, that might open your eyes, that maybe 1 to 3 and your risk to reward really isn't giving you the right edge to be able to comfortably pass these prop firm challenges. Well, if you risk 1%, that really does open the door a bit more. 20%, obviously, potential with that 50-50 strike rate. But you have to remember that you have obviously a 10% window of drawdown for most of these prop firm challenges. So you have to be very, very smart with that, how you manage that 1% risk as well. However, looking to the right here, we can see a 1 to 5 gives you 20 trading days. Everything's the same. But even on 0.5% risk, you can gain 20%. So meaning, even if you lose, say, on obviously outside the perfect world, even if you lose, say, 12 trades and win 8, you're still going to be very comfortably, above and passing that challenge. And so having a fixed risk to reward on its own is so powerful to implement into your trading, because it's really going to open your eyes. It's really going to give a lot of smoothness and calmness, should I say, to your trading, and whilst you're trying to pass these prop firm challenges. Now, when you accompany a fixed risk to reward system alongside potentially even a fixed partial system. So say if your trades could go longer than 1 to 5, but you make sure on every single trade at 1 to 5, you bank 80%, 70%, 60%, whatever it is, but repeatable. So every single trade is the same. That's going to allow you to accumulate obviously more profits if it goes further. And if not, at least you bank the majority of your profits if it doesn't. Now, on top of that, we also have obviously your repeatable pairs as well. So having fixed pairs that you trade, coinciding with the session that you can trade in, for example. So as I said, as a great example or two examples, if it's New York, obviously you're looking at gold, USD cross pairs, and then obviously if it's London, you're looking at really your pound and potentially euro pairs as well for that opportunity to trade. When you accompany everything we've gone over so far, then even one thing I've mixed out is fixed time frame. So a fixed time frame, meaning that you specifically only use, say, the 1 minute, the 1 hour, and the 4 hour, for example. It's a bit of a jumble, that one, but it could be the 1 minute, 15 minute, and the 1 hour, using those structural points and using those specific timeframes on every trade for your analysis, looking for, say, your 1 to 5 per trade in the London session every day. So you're trading 3 hours a day on average, looking for 1 to 5 a day, looking for one trade a day on GBP USD, using those timeframes. That's the sort of mindset you want to have. That's the sort of repeatable process that is going to be extremely powerful for your trading. And it's going to allow you to not only have a calmness to your trading, but also understand what you're looking for, understand the sort of results. It even gives you almost not a target, but a ballpark figure of what's achievable should you follow that plan. Now, it's not as simple, of course, as just having that plan and then going and doing it. No, you want to obviously back test your repeatable process. You want to be able to then be confident and live test even and paper trade your repeatable process to see the results and hopefully bring that calmness towards your psychology when trading it live. And I would always recommend doing free trials of these prop firm challenges and passing those a few times. We always say about 3 times in the Viper group to then have confidence before doing an actual live one. Now, obviously on the next session, this one's been a bit short, but hopefully the powerfulness of the repeatable process and the sort of things you want to be thinking about when it comes to trade management, entering your trades, even exiting your trades, as much as you can think about when it comes to trading. And when it comes to whether it's being on the charts, as I said, entering, managing, exiting, as many aspects of those elements that you can think of, you want to have covered, because essentially you want to have everything pre-planned before you go and do it live and before you actually even start to trade, because then you're not freestyling, you're not leaving things to chance, you're working from an edge that you've already worked on and thought about and even trained, if you will, and seen the results of on the actual charts. Now, we do have a Viper trading plan that you can always message me, email me, using the email in the bio below or the description, shall I say. And you can request that trading plan. It should give you a nice idea of what you want to have in there as a part of a repeatable process. Now, on the part 4, we're going to be going into actual charts. I'm going to try and give some examples of different repeatable processes using different tools. Probably more so the mainstream tools, such as your Fibonacci, your key levels, and trend lines, etc. And of course, if you have any questions in regards to exactly how we trade at the Vipers, or you want to become a member, obviously the details are all below in the description. If you like this video and so far the prop firm series, please subscribe, and comment below. Obviously, your biggest takeaways or any questions. And yeah, so far we have done obviously the mindset, the biggest mistakes that people make. Now we've done the repeatable process. Next up, and the final part, will be the actual charts itself. Thank you once again for tuning in. And again, sorry for the delay, but appreciate you all as always and all your support, and catch you on the next one.